Hello and welcome to this lesson where I'm going to be talking about strategy mistakes that beginners usually make. So I'm going to talk about three things today: entering trades too early, ignoring market structure, overtrading without confirmation. So we have defined two checklists, the 1 minute model checklist and the school run checklist. So when we define these checklists, let me jump into the chart. That's one checklist for a 1 minute model, and the other checklist is for the school run model, right? So we have two models that we're trading. This is on a 1 minute, this is on a 15 minute. So the school run model takes more patience than the 1 minute model, but still we want to enter trades based on the checklist that we're seeing. So enter trades too early is one of the most too early, too late. We don't want to miss out the trade. Um, I want to show you some examples of this, right? Entering trades too early, entering before liquidity sweep, entering before breakup structure, entering without a fair value gap reaction. We're entering too quick, and also on the school run. So on the 1 minute, you know what? Let's jump to the school run directly because I see a setup here directly. So on the 1 minute, this is what it created, right? On the 1 minute, on a 15-minute candle. So I'm seeing a setup right here, right? The trend is defined before the market open. Has it done a 1 minute breakup structure to the downside? Is the trend defined by the market going down? You can see that it's done a breakup structure to the downside and it's continuing to the downside and it's create a higher high, higher lows, higher high, higher lows, and it's basically going to create a higher low again. So we're marking out the overnight range here. There's an overnight range happening. There's a low right here and there's a high created right here. This is the overnight range. Now, the first 15-minute candle that's that happened was that was the wrong, not this one. Let me give you a better example. This is on the New York session, right? This is the low and this is the high of the London session as called as the overnight range because if you trade the London session, the Asia session is the overnight range for you. If you trade the New York session, the London session is the overnight range for you. So in this scenario, you can see that the trend is defined as bearish. We're going down, right? The first 50-minute candle closed outside the range. Now, this is the range that we are marking on a daily basis, on this overnight range. Did the 50-minute candle close within the market open? No. And this is what usually happens. Let me bring that back. Let me go to the 1 minute time frame. This is what usually happens. What where the mistakes happen. So you're waiting for the first 15-minute candle to close. Let me mark out the first 15-minute. This is the 3:45. You're thinking, you know what? Because it's making candles to the downside right here, let me enter to get a better entry. That's what happens. It hasn't closed yet the 15-minute candle because this is where it closes the 15-minute candle on 3:45. At 3:15:45 is the when the 15-minute candle closes, and this is what it says on our checklist. So because it didn't close, you say, you know what? Let me just enter this trade right here and put my stop loss on the underneath this area and my take profit right here on this liquidity area, right? So what did you do? You entered too early. You entered too early, and this is what happens. The market goes up, and it didn't close over the overnight range. It closed inside of the overnight range, right? You can get lucky and still win this trade, by the way, but that's not following the checklist. That's not how it works because you can get unlucky and have the trade go the opposite direction, which it did right here. So what did it do? It continued. It took out our first take profit, which is a good thing, but that's not how it works. Because you're winning a trade, it doesn't mean that you're winning because this can we are relying more on the checklist than on our profit. We're not trading when people say you're trading your P&L. We're not trading our P&L. P&L, profit and loss. If we are checking the amounts and we're happy because we made some money and then it's the market is going to take it back because you don't have the habits in place of following the checklist. That's what's going to happen in the future. trust me on this, because the P&L would just dilute your attention to other things. So what we need to follow, so this is the mistakes that usually people do. They enter too early. So we don't want to enter on this trade because the close of the 15-minute candle didn't close over the overnight range. So that's one example. Now, let me see another example on the 1 minute time frame. Uh, yeah, this is this is when not to take a trade. You can see that there's a liquidity created right here, and this is on a 1 minute model, right? Liquidity is created right here. We are bearish. Liquidity is created right here. We are bearish. We are going to the downside, and we're seeing that because the checklist says liquidity sweep on the 1 minute, 1 hour, and a 15 minute. We can't see that any liquidity sweep has been done, and we still entered the trade, right? There's no liquidity sweep. The market didn't come up and swept this area, and we're taking a trade from that. That is not how it works, because the market can most likely don't do a liquidity sweep and then continue to the upside, right? And take us out. So in these areas, because they didn't sweep liquidity, then again, you can get lucky. You can get lucky and the market can reverse to the other side. Because in this scenario, it gave us all of our confluences. You can see in this scenario, trend defined. When a 1 minute break of structure defined right here. Fill value gap react. This is a beautiful trade. It took all of our confluences except the liquidity sweep. And then we don't take a trade on that. We sit on our hands, we relax, we're being patient, and we're not taking a trade because of that. Why? Because it didn't sweep liquidity in this area. Let me just, I want to show you something else. Where's the mistakes? Entering before liquidity sweep, entering before a breakout structure. Okay, let me give you an example. So we have in this scenario, okay, um, let's say, let me jump to that area. You see in this scenario, oh, still, in this scenario, the break of structure is happening to the downside. All right, there's a break of structure happening to the downside on the 3 candle. And this is what happens. We have defined the trend going to the upside, right? And this is a natural trade because we don't know if the market is going up or down. But the first break of structure happening to the downside is saying that we are going bearish. So now when the market is saying that we are going bearish, we jump down to the 15-minute, we jump down to the 1 minute, we're marking out liquidity on this area right here. We are waiting for the market to do what? Basically, we're waiting for the market to take out these liquidity areas because we are bearish. We have defined the trend already. We have bearish. So when it swept liquidity right here, you're waiting for every confirmation to be set, as it's doing right here. Maybe I'm going too quickly. Sorry about that. 15-minute. This is not on the. Let me change it. You see, it did a liquidity sweep, right? On 1 hour and 15 minutes, on the 15 minute, it did a breakout structure right here. It created a breakout structure right here on this area right there. Now, it created a fair value gap right here on this area right here, right? It gives a reaction on this fair value gap. Do we enter right here? Because it can continue up to the upside. We don't enter on this trade. Why? Because we are not following the checklist and we are taking the trade which is not based on the trend. Which is not based on the trend. because the trend is bearish, and we're not following the checklist if we go the opposite direction. We do the reversal. I'm saying with time, with experience, you can do the reversal. You can base your risk and your the way your strategy flips. But for now, as a starter into trading, I recommend that you just stick to the checklist like nothing else. Just stick to it, nothing else, and just following it on a daily basis. If it doesn't happen, if you don't see the trend and liquidity sweep and the breakup structure and the fair value gap and the risk reward of 1 to 2 minimum, if you don't see those things, we don't trade. That's the thing with trading. That's what trading is boring, because you're following the trend, following the checklist over and over and over again. You know what you're looking at, you know what you're seeing, you know what you're expecting to happen before you enter, and then you enter. Let me do so. Entering trades before early, ignoring market structure, trading against higher time frame trends. That's the thing. Trading against higher time frame trends. So the trend here was bearish, and we're trading against that. That's the one of the biggest mistakes. Not identifying higher, missing shifts in structure, big break of structure. Um, yeah. Over trading without a confirm, taking trades without full checklist. Exactly. Trading during low quality conditions. Forcing trade out of boredom. That's the thing. Forcing trades out of boredom. When you sit in the market, like, let me show you. You know, you can come to the market right here. Let me show you an example. All right. You can come to the market right here. You can sit next to the market this entire time from 9 to, let's say, 11 or 12, 11. Let's say 11, without doing anything, because the market is not giving you anything. And because we are so bored, this is what happens. We are so bored. We have it on 1 minute, let's say. We are so bored and we're sitting right here and we're not seeing anything happening in the market. We're thinking, you know what, let me just try this trade. Let me just do it. Let me just take it. Let me just take it. Okay. Oh no, it was so close to my take profit area. What happened? You know what? Let me just reverse it again. And then you reverse it and you get taken out right here. And then you reverse the trade and you think, you know what? It's so close to my take profit, and it reverses again. This is what tilts you and makes you lose control, because you're bored. You want some dopamine, some excitement. That's what we want, right? If you want some dopamine, some excitement, listen to music, listen to something, read a book whilst you trade, because this is what happens usually. And you're losing two trades because of bad decisions, and that's when the tilt starts happening. The tilt meaning you make one mistake, and then you make another mistake, and then you make another mistake, and then it spirals out of proportion, and you can't control it anymore. You need to stop yourself at the end. All right, let me make sure I didn't miss something here. All right, so I covered three things in this lesson. Entering too early leads to bad trades. That's the thing. We're entering too early, and we're entering with not enough confirmation to enter the trade. And then again, we can get lucky. But and some of us are lucky and some of us are not lucky, but it doesn't work that way in trading, unfortunately. So ignoring structure leads to wrong decisions. If you have a structure that's telling you that it's going bearish, and you see a liquidity sweep going to the other direction, and you're thinking, you know what, should I just try this trade? I recommend that you don't. And overtrading comes from lack of discipline. When you see these things when you are bored, that you're gonna, you know what, I'm seeing this going to the upside, let me take the trade. That's how retail traders are trading. That's not how the banks and institutions are trading. We are trying to trade as close to how the banks and institutions are doing, so we can get the profits that they are getting, basically, but in a smaller amount. Right. Lesson check-in. As always, take a moment to think about your biggest takeaway from this lesson. One sentence is enough, and share it in the comment section below. And if you like this video, feel free to follow me on YouTube, on Instagram, all social media platforms that I have. And if you haven't joined the Skool community, feel free to do that. Talk to you in the next lesson. Have a great day.